Hello everyone, welcome back to Learning Finance. My name is Davide and in today's video we are going to take a look at Foot Locker stock, ticker symbol FL. And if you are interested, just stay tuned, and if you like the video, leave a like. Let's begin. So guys, Foot Locker. Probably all of you know the Foot Locker business, okay? It's a retail clothing industry with a lot of shops all around the world. It's based in New York, Manhattan, and where is it? Guys, all the shops here, see, probably every single one of you has been at least once in a lifetime in one of those. And not only those, actually, because Foot Locker's business has a lot of subsidiaries, which are those: Champ Sport, Look, Runners Point, Sidestep, and blah blah blah, which are subsidiaries. That means that basically at the end of the period, the revenues are gonna be part of the balance sheet of Foot Locker itself. Okay, now what's the situation right now? As all of you know, right now the entire world is shut down. Okay, with this situation we don't know for how long, and basically, yeah, it's a strange situation. As you can imagine, the business itself of Foot Locker has been hit in a huge way. Okay, that's normal. I mean, people are not going around buying shoes, people are not going around shopping, people are staying home, so they don't need shoes. Okay, they're not buying new shoes, and even if they want, they cannot go outside and buy shoes. Now, I was thinking, well, probably they can solve this problem with an online shop. Okay, yeah, why not? Like Amazon is doing. Okay, and Foot Locker actually has an online shop, but the problem is, I don't know because I've never used it, but I was reading some reviews here and it looks like they don't like it. Okay, it looks like, you see, this is like 6 minutes ago. I ordered a pair of sneakers on April 8th, blah blah blah, and it's like basically they're having problems in August here as well, and they are all negative, and this is not positive. Okay. Because I mean, well, probably, okay, they have a real problem with the physical shops. Probably they can solve a part of this problem with the online shops, but I don't know, but it looks like they're having a problem here as well too. Anyway, let's take a look at this article. This article by Moody's. We are gonna take a look at the balance sheet very soon, okay, and also a cash flow analysis. This is from today, Moody's, a periodic review, New York, April 24, 2020, and where basically, because as we are going to see very soon, Foot Locker has a wonderful balance sheet. And here, in fact, they are saying that the rating reflects that Foot Locker has ample liquidities to support a potential cash flow deficit as a result of this illness. So basically, they are saying that they are fine right now. And is this positive? In fact, today the stock has gone up like 3-4%. And if you're wondering why, it's because of this article here, okay? But, let's see some numbers, because I think the numbers are probably more important than just talking, to have an idea, a better idea on the situation. Okay, I love numbers, and so let's take a look. Here we have, this is just to understand. So Foot Locker, ticker symbol FL. This is just a general view. The high of 2020 has been $40.40, and the low has been $17.46, with a maximum drop of minus 56, almost 57%. Now, I took the last balance sheet. This is December, probably it's just 1st of January 2020. Anyway, December, last quarter 2019, to see how the business has gone through this crisis. And they have almost 8 billion in revenue, cost of revenue is around 5.4 billion, with a gross profit of 2.5 billion. Now this is wonderful, guys. Look at that. This is what the Moody's article were talking about. Total current assets, 2.38 billion. Total current liabilities, 1.19 billion, with a current ratio of 2. This is wonderful. 907 million of cash. Okay, this was in January. Probably now they have a little bit less. Okay, but this is how they went through this crisis with a wonderful balance sheet. So they are gonna make it through. This is, I mean, no doubt about that. Okay, look at that, current ratio 2. It's good when it's above 1. This is super good, okay? And let's take a look. This is total assets, so we are considering also the long term. 6.5 billion, total liabilities 4.11. That gives us stockholders' equity of around 2.47, which is actually just this minus this, and with a ratio of total assets divided by total liabilities of 1.6. So again, it's really great. And let's take a look at margins. Margins for Foot Lockers are the operating margin. The most important one is 8.11. Industry average is between 5 and 13%, so they are exactly on average. Well, could be a little bit better, but you know what, it's not too bad. So let's take a look. Valuation. The valuation, considering a price of 23, which is today, has a valuation of 2.4 billion in the stock market. So remember, this is the equity in the balance sheet. Okay, so that means that in the stock market you can buy with 2.4 billion, you can buy 2.473 billion. That gives us a book to value of almost 1. Basically right now the stock market is pricing Foot Locker almost at the fair price for considering the balance sheet. Okay, that's why book to value is 0.97. with just 2.95% of discount. What I mean is that in that case here, the price you see here is just basically I took this one and I divided by the total amount of shares outstanding, and I get 23.74, which would be the fair price of the balance sheet. Okay, just the mathematical price of the balance sheet. And as we can see, we are really near to it. So it, from this point of view, is not too much undervalued. But let's also take a look now at an analysis of, quick analysis on cash flows. Okay, so I did 3 scenarios. The first one is really bad. I said, well, you know what? In 2019, they had a free cash flow of $500 million. Okay, let's say that this year the cash flow is gonna be, well, really negative, almost like minus 130% from the previous year, minus 200 billion. And let's say that the next year they're gonna make 0 free cash flows, to start to ramp up again from 2022, but you know, at half of the volumes of free cash flows, that they were having in 2019. Okay, so very bad scenario here, and a growth of around 20% from 2023, 2024, to come back at the same levels just and only in 2023, 5, sorry. Terminal value, I just took a growth rate of 5%, which is bad. Discount rate 20% because I like to be conservative on those valuations. Okay, if you find value in a conservative valuation, your risk reward is really great. Believe me, it's always better to be careful in the game of the stock market. And so in this bad scenario, we are having a fair value price of today of 17.72. If you pay attention, this is the price really near to the low, okay, the low they made in March. And it's low. This other scenario here is considering as low scenario. So basically what I mean is that, okay, they're not gonna have a loss so big, but they're gonna have almost, here I consider a 60% loss, okay, and they are gonna ramp up again, but in a very slow way, okay. So they are not gonna make, not even in 2025, they are gonna make the same amount of cash flows they were making before. They're gonna ramp up very, very, very slowly. That's why it's the slow scenario. Discount rate is also 20%. Terminal value growth 5%, and we are having a price of 19.26. And at the end, I have the normal scenario, which I consider is the normal scenario, where, okay, this year they're having a loss, and they are gonna pretty recover soon, and they're gonna make the same as they was making before from 2023, to go up and go up. And again, terminal value around 5%. In this case, we are getting a price of $28.88 as of today. These are theoretical prices, okay? So if we take an average of those prices, we get around $22.4. And this is a theoretical price I like to consider. So in the end, what I think about Foot Locker, well, let's start with the positive side. Wonderful balance sheet, as we saw before, and absolutely no doubt they are gonna make through this crisis, and without absolutely any problem. They had a lot of cash. Now they are gonna release at the end of May the Q1 earnings, so we're gonna take a look about those, how bad it has been this period, but I think they are gonna make it through. Negative side, well, guys, so as we see here right now, this is an average price I got from this analysis, and the price is very near, so we are actually at the fair price. It's not undervalued, in my opinion, right now. And bear in mind one important thing, guys. The Foot Locker business model, it's very stable, and this is positive, and also not too much positive for another point of view. What I mean by that, Foot Locker is doing the same stuff as they were doing 30 years ago. They sell shoes, they have those physical shops all around the world, and that's it, basically. That's it. They have, as we saw, they have an online site, an online shop, which is not too good, and that's it. They are doing the same stuff. They are not innovative, they are not innovators, okay? They are not trying to find new ways, always improving the business. This is not a growth stock, okay? This is That's it. This is the, I mean, very stable cash flows in the last 5 years. They have done always the same numbers. And why we have to be careful with those kind of stocks? Because it's very important to pay attention to the price we get in. And I'm gonna show you why I'm telling you that. So just this is Foot Locker. This is Foot Locker graph. Okay, this one. The green return here is Foot Locker. The red return here is the S&P 500. Now, as you can see, Foot Locker has always been underperforming the market. Look at that, guys. Look at that. I mean, what this is basically telling us that, I'm gonna make an example so you're gonna understand. Here it's like, let's come back to the weekly time frame. Here it's like, oh wow, I'm gonna buy Foot Locker. This is the 26th of July in 2010. Okay. Now, if I hold this position until now, I will have a total return of 82.57%. While if I bought the S&P 500 up today, I would get 177%. So it's a clear underperforming. It's more than a half. Okay. So that's why I'm telling you, be careful with those stocks. Be careful, because the price you get in, it's really important. You know what was the only situation where Foot Locker outperformed the S&P? Well, this was if you bought the stock at the bottom of, here we are, at the bottom of the crisis in 2008. That's the only situation. If you bought Foot Locker at the bottom of the crisis, right now you would have a 390% return, while on the S&P right now you will get this return right here. That's absolutely the only situation. Okay. All the other times the S&P has been better than the Foot Locker stock. So look at the difference. Look at the difference with, for example, Google. This is Google stock. Google stock. The green return here is Google. The red here is again the S&P 500. It doesn't matter at which point you buy Google stock, because you are gonna always overperforming the market. Look at that. The green return is always above the red return in this case. Okay, this is not the same as here. Look at that. Red return, S&P above. So why I'm telling you to be careful? Because if in the case of Foot Locker, if you don't buy the right price, you're gonna get stuck in a sort of a trap where basically you are underperforming the market. Okay, so it would have been better if you bought the S&P 500, and that's something we want to avoid. Okay, so by saying that, I'm not saying that this is a bad company. Okay, this is a good company, pretty stable, wonderful balance sheet. But would I buy Foot Locker at this price today? No, today we said we had $23. Would I buy Foot Lockers at $23? No. If you have it, just hold it. But I would not personally buy Foot Locker at $23. Where I would like to see Foot Lockers to start to thinking about buying it, I would like to see Foot Locker below this price here, below this bad scenario. And I would love to see Foot Lockers near $15. Okay, because in that case I would be pretty sure to have a situation of a stock that is undervalued. Okay, and this is important, very important for this kind of stocks. You need to pay attention to the price you buy it. It's not like Amazon, it's not like Apple, that where it doesn't really matter at what price you buy it. In this case it matters. So that's my opinion, guys. I mean, my personal opinion. You do whatever you want. Just be careful and be patient with these kind of stocks. Okay, so this is the end of the video. I hope you like it. So if you like it, leave a like and subscribe. I wish you a wonderful day, guys. Bye.